Hello, welcome to our topic all about audit planning and strategy. Now, the objective of the auditor is to plan the audit so that it will be performed in an effective manner. So which means the auditor has to determine whether they have the time, resources, and manpower in executing the audit. In planning, it is important for us to know what is audit risk. Now, it is the risk that the auditor expresses an inappropriate opinion when the financial statements are materially misstated. So when we express an opinion, we will say either materially correct, or there are certain exceptions, or we didn't obtain appropriate and sufficient evidence, and also the possibility that the financial statement is materially misstated. So as an auditor, if we express our opinion and we provided incorrect opinion, okay, that is a big problem for us. So as an auditor, we have to ensure that we provide the appropriate opinion on the financial statements. So when you plan, you actually reduces the audit risk, because in planning you are determining the things that you need, the things that you have to collect, the things or the resources that you will need. Okay, so this is important for us to plan so that we can reduce audit risk. As an audit practice, we are only providing reasonable assurance. That is the highest level of assurance that we can provide. So reasonable assurance, it says, obtained when the auditor has obtained or collected sufficient appropriate audit evidence to reduce audit risk to acceptably low level. So when you design your audit, you're trying to determine what are the evidences that you need to collect. And when you collect, you need procedures or right or appropriate procedures to collect evidences. Now, audit risk will have three components. The first one is inherent risk, the second one is control risk, and the third one is detection risk. Now, inherent risk is higher for some assertion and related classes of the transaction, account balances, and disclosure than for others. It is where the accounts or transaction or an item, because of its nature, complexity, and number of transactions, these attributes makes the transaction, account balances, or account at high inherent risk. So it is not because of the lack of control, it is because the account or the assertion or the transaction itself is at risk. So for example, higher for complex calculation or for accounts consisting of amounts derived from accounting estimates that are subject to significant estimation uncertainty. So these are attributes related to transaction and accounts, which without considering the control is already at risk. Control risk function or is a function of the effectiveness of the design, implementation, and maintenance of internal control for or of the management to address the risks identified that threaten the achievement of entities' objectives, which is relevant to the preparation of the entity's financial statements. So it should be noted that no matter how well designed and operated, we can or the business can only reduce risk of material misstatements because there are inherent limitations in internal control. So for example, if there are connivance between two persons within the transactions, they may be able to hide any fictitious transactions or frauds because both of them may be able to control checks and balances of the transaction. So which means you cannot eliminate control risk. You can only reduce that to acceptable level because of the limitations of the internal control. The third one is detection risk. Detection risk relates to the nature, timing, and extent of the auditor's procedures that are determined by the auditor to reduce audit risk to an acceptably low level. It is therefore a function of effectiveness of an audit procedure and of its application by the auditor. So this is the audit risk function. So my illustration here will be for two extremes. Now, for inherent risk and control risk, if you combine this, as in the previous slide, they will be called risk of material misstatements. So these are the components of risk of material misstatements. Now these are, again, two extremes. If the risk of material misstatements, both inherent risk and control risk will be high, detection risk will be low. If inherent risk will be and control risk will be both low, or shall we say risk of material misstatements will be low, then there will be high detection risk. It should be noted that there is an inverse relationship between risk of material misstatements, which includes inherent risk and control risk, and detection risk. Now, when it comes to materiality, when we do our planning, we apply materiality, and also when we perform our audit, we apply materiality. When we are determining whether the misstatements or uncorrected misstatements will be significant in our audit, we also apply materiality. Judgment about materiality are made in the light of surrounding circumstances and are affected by auditors' perception of the financial information needs of user of the financial statements, and by the size or nature of misstatements, or combination of both. The auditor's opinion deals with financial statements as a whole, and therefore auditor is not responsible for the detection of misstatements that are not material to the financial statements as a whole. So when we try to deal with misstatements, we will use materiality to check whether that will affect the financial statement as a whole. When we talk about size of misstatements, we are looking into the quantity or magnitude of misstatements. While when we are looking into the nature of misstatements, we are looking into the quality of the misstatements. Now, qualitative materiality, we call it the nature of the item. We have to consider or see these factors. If the misstatements coming from fraud, non-compliance with laws, related party transactions, and change of accounting methods. Okay, so these are not based on the amount or magnitude. It is because of the characteristics or the nature of the item that may be related to materiality. Now, quantitative materiality, it's a simple, basic one. It is percentage of the relevant base. Now, determining relevant base, it depends on which account that you are testing for. So, for example, if you want to test expense, you can use sales or profit as your base. If we want to test, let us say, an asset account, then we will use the total asset amount as our base. So after we perform assessment of inherent control risk and detection risk, then we will create our audit strategy. So this is our response to the risk that we identified during our audit risk assessment. So there are two major classification of audit strategy. The first one is test of controls. Test of controls, an audit procedure designed to evaluate the operating effectiveness of controls in preventing or detecting and correcting material misstatements at the assertion level. So which means here we are focusing on procedures, processes that had been designed by the company in preventing, detecting, and correcting material misstatements. of course, we are focusing on the assertion level. For more discussion on assertion level, you can watch the audit evidence video lecture. The second one is substantive procedure. An audit procedure designed to detect material misstatements at the assertion level. Substantive procedures comprise of test of details and substantive analytical procedures. Now, test of details, we have test of transaction, and the other one is test of account balances and disclosures. Now, be mindful, substantive procedure is designed to directly test the assertion, while test of controls is designed to test the process and procedure to see whether those will be able to prevent, detect, and correct material misstatements. So these are two different audit strategies. Test of controls focusing on process. Substantive procedure is focusing on the assertions. Now, if you design your audit strategy using the two extremes, if inherent risk, control risk, which will be the component of risk of material misstatements, will be both high, then we can perform few or sometimes we can skip test of controls and perform more substantive procedures. If inherent risk, control risk, again component of risk of material misstatements, will be both low, then we can perform more tests of controls and then few substantive procedures. Take note that irrespective of assessed risk of material misstatement, the auditor shall design and perform substantive procedure for each material class of transactions, account balance, and disclosure. Remember, what we are doing is to perform our audit to test whether there are material misstatements that might affect the financial report. And the financial report will reflect the assertions made by the client. So, we cannot avoid doing substantive procedures basically because that is the fundamental thing that we need to do, which is of course to test assertion. And that's it for my presentation. Our references will be ISA 200, ISA 330, and then ISA 300. Thank you.